the 10th of December, 10 a.m. Central Time. And Tim will not be able to be here today, but we've got Randy and myself. And I don't know, I'm not sure Deshaun's going to be able to make it either. But anyhow, we're going to talk about.
Well, you got Micah too.
Oh, we have Micah. Yeah, he's running the show today. Marcus and I guess they split off on every now and then. Anyhow, we're going to talk about the dogs of the Dow. And this is a real interesting technique that Randy has been able to modify since it originally came out with some micro moment type features that just give you incredible returns. Now, most people like the Dow stocks, and most people because they pay dividends. There's 30 stocks, and we're going to show you here in a minute where to find them, what the prices are and such. Typically, there's only 30 stocks in the Dow, and they're typically, fairly decent price stocks. So they're kind of expensive, but they pay dividends. They're supposed to pay a dividend. And if they don't pay dividends, they're dropped from the Dow and replaced. But in any event, we're going to show you where to find those today and show you an advantage. Because if you're an investor, we have lots of them that like Dow stocks. And Randy's already shown a technique several weeks ago where you can take your Dow stocks. They're expensive. And you already own them, though. Most people have owned these Dow stocks forever, and they enjoy the quarterly dividends. They pay dividends by the quarter. There are some stocks out there that pay them by the month, but we're talking about Dow stocks that pay by the quarter in most instances. And with you've got all that money wrapped up in that stock, and most of them are paying. They've got to pay at least 3%, or they will drop them off the Dow. But that's not much, and a huge dividend is 4 or 5%. So they're not paying a lot on a quarterly basis. But you can take the modified dogs of the Dow technique that Randy sort of developed here and generate huge, consistent interns without the risk of losing the stock. And you'll go through that technique here in a minute. We've done it once before, but in a briefer form on the podcast. But that's what we're going to talk about today. And there was one other thing I was going to mention. Now I forgot this original technique, I started when I was at Merrill Lynch. I didn't start it, but they developed it at Merrill Lynch years and years ago. And essentially, we were supposed to go out and sell that to our clients. And we even guaranteed, we were so bullish when we even guaranteed a 10% return, which is not much today based on what Randy can do, but it's a lot more than just owning the stocks and collecting an annual 4 or 5 or 3% return. So that's kind of the history of the dogs of the Dow. And you can go on Google dogs of the Dow, and you can pull up all the dogs and you see them and talk about them and all that. Can you pull those up? There you go. These are the dogs of the Dow, and you can see, my glasses on here. It's not a great big screen. Again, the dogs have to have at least a 3% return to keep listed. Now, obviously, if it drops, like there's one there, 3.06, or is it probably the lowest? That's 2.94. That JP Morgan will probably be dropped if it doesn't change to 3% pretty soon. So, Randy, why don't you kind of pick up and kind of take it from there, because now they know where they find these dogs of the Dow. And this list is for, I don't know if this list is for the 2020 returns or what. If you scroll down there, do you see where, Micah, where it says the dog?
That's that's the current week.
Okay, that's the current. Okay, good deal.
It's based on last week's price.
Yeah. And while we're doing this, if you want to make a comment, start up a conversation or something, just take your mouse and your keyboard and write the comments, and we'll certainly address any comments that you have. And if you want to ask Micah a question, Micah handles all of our stuff outside of doing the selections, and he's real good at this stuff and knows how to do it. If you have a question, how do I get this? How do I get that? He can certainly answer it. And he's getting old now. He's been with us a long time too, but he's not as old as Randy.
I'm feeling old. I got to go to the chiropractor every week.
Yeah. And if you
I could use that too, Micah. I like to go to the chiropractor.
Yeah. If you hear those beeps and things, nothing's wrong with your computer, but this construction crew out here on the street. We live in downtown Fort Worth, and they're doing something to the building. You got a big crane up there, so that's what that is. So it's not anything. It's not anything wrong with your equipment. Go ahead, Randy.
So, and Micah trades the micro moment trading the positions that are in and out in seconds, back to cash at the end of every day. So he also does that, which is a fantastic technique, especially in this day and age with the way the market is right now. You never know exactly where this market's going, except Micah can tell with the intraday streaming charts. He can tell where it's going in the next couple minutes. So,
and that honestly, I mean, that just really quickly, that is like the basis of the technique. Is it's a lot simpler to get an influence of direction. The more time, I used to say it like, the more working parts, the more stuff that can break, right? So when you're talking about trading, the farther out, if you're doing a single directional thing, now this is not against Randy's, because Randy can trade in any direction. But if you're doing a type of trading that relies on one direction per trade, then the shorter term it is, kind of the less that can go wrong with that. If you're on top of things, and of course stick to the rules. Yeah.
Let me say one thing here, Micah. We're in our 84th week of our micro moment trading. We've been doing it for about 3.5 years, but we've been doing it in just our own corporate accounts. And since we made a subscription service of it, we're in our 84th week, which the 80 ends tomorrow, and an average weekly return of 96.8. Last week we had 144% return. Now, those, like these two guys just said, these are quick, fast trades. Randy's versions are a little slower because he uses a different technique, but his returns are just as fantastic. So if you really want today, I had to leave early. It's only an hour session each morning during the week, Monday through Friday, and they were up to 14.17248% over 3 trades, and that's when I left, which was about 9:10 or so. So that's kind of rundown on that, backing up what Mike and Randy were saying. So go ahead, Randy.
Awesome. Would you guys like 3 questions before or after we get into this?
Well, why don't we look at them right off the bat, see what we got here, because they may have something we want to talk about. So why don't you take Frank there, Randy?
Okay.
Okay, no, I can answer that for you. Okay, Frank asked, would I be correct in saying that the toolbox covered call screener does not select stocks that are lower than 75% of their yearly high? Yes, it does. But the problem is, Frank, when you go to the selector, you got to check those boxes over there. If you have default checked, then you're going to get, it's going to show you ones with P ratios of such and such, and all the different criteria that we pick, and broker ratings and stuff like that. If it's unchecked, or if that particular one is unchecked, you need to check it. Otherwise, if you uncheck 75%, because it's one of the things you have to have checked, unless you just click all the standard criteria, then that's going to be included. But you might check that out, because I think you'd send an email out, which I got just before we came on the air here, and so I was going to write back and tell you that. But you just need to check and make sure that particular one's checked. It'll be stocks that are less than 75%, because that's one of the rules for that toolbox.
Yep, that's a toolbox rule to increase the probability that the stock is going to go up and you'll get called out, which is the goal of the covered call process.
And why don't you take Eric there, Randy, because your name's in there.
Eric says, hi, thanks for joining Randy for the refresher course for me on covered calls last weekend. Yeah, we just taught the 2-day seminar for covered calls that traditional micro moment trading, Joe Hooper special method of investing with covered calls to generate monthly cash income on your portfolio. And we just taught that 2-day seminar, which is a rule-based technique. You learn the set of rules and you follow the rules to enter positions, and that's what Frank's talking about. The toolbox has the rules in them for selecting a position, and then you get called out at the end of the month. And if you don't get called out, then we have a whole set of what we call management techniques that allows you to continue generating income until you are called out.
Okay, let me answer that part about the 184 pages. You're right, Eric.
Yes.
That manual's old and it got big. It got really big. There's a lot more pages. What is it? 300 something pages now, Randy. It's not just 184.
Yeah,
And,
I think it's but if Eric just sends an email into support@micromomenttrading.com and just writes in there the last page number in the manual, Sue Ann will send you the up to the update on the pages of the manual. So and at no cost. So that's one of the things is when there are updates, there's no extra charge for getting the updates. Where most places will charge you, to get a new version and that type of thing. But
yeah,
send to support@micromomenttrading.com.
yeah, we don't send. Obviously, we don't do it. It got to weight. I don't know, 4.5 pounds or something like that. So she sends that out now, the whole book electronically. So she'll probably just send you the whole book electronically. So, okay. And Cindy says, can you be sure to discuss the PRT technique sometimes later in the broadcast? Well, we certainly can. And Marion, morning, gentlemen. And that includes the wizard behind the screen.
Yeah, I don't think the wizard's not here today, right?
Oh, the wizard here today is Micah. So they both start with M, though. So.
Hi, Marion. Yeah, I'm jumping in for Marcus this week, so good to hear from you, though.
Okay.
All right, you guys are all caught up.
Yeah.
Okay. So the lead the dogs technique is what Joe is talking about, and it leverages the dogs of the Dow theory. So Joe didn't come up with the dogs of the Dow theory. That's what the Dow Jones theory said. And in a nutshell, and I'm not trying to teach you what the dogs of the Dow theory is, but in a nutshell, the theory goes that if there's a high dividend yield, right, like Chevron or IBM, that's paying a real high percentage dividend, 5, 6, 7%, that millions of people will flock to that to buy that stock so they can earn that cash dividend. And the fact that you buy the stock drives the price of the stock up, which drives the dividend percentage down then, because the dividend is a percent of the price of the stock. Like Joe mentioned JP Morgan, that's at 2.94% dividend. That's because the stock's trading in the $122 range. When a couple of weeks ago it was down in the 100, so that same dividend would have been 3.2 or 3.3% return. So it's all based on the percent of what you pay for the stock. So lots of people buy the stocks at the beginning of the year, just hold on to them, let everybody keep buying them. The concept is that will drive the price of the stock up, but you still keep getting the dividend on a quarterly basis. And that right now, 5% a year or 5.5% a year to most people is a huge return. If you put your money in treasury bonds, you get like 1%. And if you put it in the bank, you get like 0.1%. So lots of people will be buying the stocks, and they consider the Dow stocks to be pretty conservative because they're in the 30 stocks that are in the Dow.
Yeah,
solid U.S. companies.
Yeah, what you do, Randy, is and folks out there, is on the first market day of the year, if that's on a Monday, good. And you look at the Dows, there's 30 out there, and you buy 10 of the highest yielding ones, percentage wise. That means they're going to be the lowest priced. And then as time goes by, then you don't touch them, you don't mess with them. And then a year later, the last trading day, you go back and you sell them, and you should have substantial increases. You're still getting the dividends, but you have substantial increases in your stocks. That's how it's supposed to work. Now, it's going to vary a little bit, but it typically returns in excess of 10% on an annual basis. So that's kind of technically how you do it. Now, Randy has developed a super way. So, Randy, why don't you kind of go into what you're doing now with the dogs? Out of the money call stuff, yeah.
So the covered call process is simply buying the stock and selling an option against it that provides the obligation to sell the stock to somebody else at a set price up to a set date. So you can just hold the stock and earn 5%, 6 or 4% dividend throughout the year, Or if you're going to hold the stock anyway, you can rent it out to somebody on a monthly basis or even a weekly basis, and at a price more than you paid for the stock. So let's look at Chevron. That's the top one on the list. And the top one on the list here is just because it's the highest yielding. It doesn't mean it's like the best stock. It's just the highest dividend percent in the Dow of the 30 stocks. It pays the highest percent dividend. So you could buy Chevron at 93-ish, whatever it's trading at today, around $93 a share, and just hold on to it and get 5.5% return on the dividend, probably around $1.30, $1.40 every 3 months. But at the same time, you could buy the stock and sell a 95 call against it, which means that you're selling the right for somebody to buy your stock at 95. Okay, you bought it at 93, and if you end up selling at 95, that's even more than what the dividend would be. But the fact that you still own the stock, you're still going to earn the dividend. Now, if you get called out, if that person that's renting the stock from you decides they want to pay you $95 for the stock, okay, you made a profit. Then you just take that money and go out and buy a new one. And you could keep doing that process over and over and over again. That's what the technique that's called leave the dogs here at Micro Moment Trading. It's that you're going to generate and earn the cash dividend every quarter, but every week or every month, depending on how often that you want to do it, you can generate additional cash that ends up being a lot more than the percent of dividend throughout the year. You can earn a couple percent extra every week or 2 or 3 or month, depending on what the option premium is for those individual stocks. Now, I teach a advanced process in addition to that. And by the way, every Thursday evening, I teach that whole process of how to select positions, how to enter them, and what kind of returns you're going to get. I teach that every Thursday evening in a coaching webinar. But in addition, I have an advanced process and technique that Joe's talking about, where we can take that return up tenfold. And that's what I teach in my Wednesday coaching session. We call it synthetic covered call with synthetic stock. And so instead of buying the stock, I can go out to the ex-dividend week or the ex-dividend month. And the ex-dividend month, the ex-dividend day is the day that you have to own the stock in order to qualify for the dividend. They call it the ex-dividend day. That when it starts trading, if you buy the stock that day, you don't earn the dividend. If you own the stock from the day before, then you earn the dividend. So you really don't have to have the stock in your portfolio to earn the dividend until the day before that ex-dividend day. And that ex-dividend day is available on the company's website, that they say, here's where the ex-dividend day is going to be, and here's how much the dividend is going to be. So if we're looking at, say, Chevron, and let me go look at where is the ex-dividend. The next ex-dividend day on Chevron is going to be around February 17th. They just had the ex-dividend day on November 17th, so it's usually 3 months later. So around February 17th. So
where can they find that, Randy? I can.
Well, you can go out to the Chevron website. You can, I think, like Yahoo.com. You can look in their stock researcher. Most of the broker platforms have a stock researcher in there, and you just type it in and say, when's the next ex-dividend date? So it's available all over the place.
Gotcha.
And so you don't really have to own the stock until the day before that ex-dividend date. So in the meantime, instead of putting all that capital of $93 out there in the market right now, we could buy an option that expires near February 17, which would be the monthly option of February. and buy the option deep in the money, so it has minimal time value, and that might be it might cost $10. So you have an option that costs $10 a share instead of the stock that costs $93 a share, but it gives you the right to buy the stock at 93-ish when you want to exercise it.
So you're going to get the dividend. You're going to get the dividend plus the money you're making on these calls you're selling on that sucker. I mean, fantastic returns. Yeah.
So between now and the ex-dividend date, you can sell an option against that option that you bought and generate weekly income against that. So if I actually look at Chevron, let me go to my trading screen, and yep. So I could buy a February 80 call that gives me the right to buy the stock at $80, and I could pay about $16 for that. Then I can sell next week's 95 call against that for $2. So I can get $2 per share cash income for next week against $16 of investment. That's 12% return for a week. And if the stock goes up to 95, where it's trading at 94.47 right now, it goes up to 95, I get called out at 95, and I make additional money on that. If it doesn't go up to 95 to get called out, I sell the 95 call for the next week and generate another $1 plus. Let's see what it will be for the following week. Yeah, it'd be about another $1.40. So I could generate income of over $1 a week on that $15, $16 investment for the next, was that like 14 weeks between now and the third week in February? That will be 1, 2, 3, 4, 5, 6, 7, 10 for the next 10 weeks. So I can basically earn back what I've actually paid for that option before I need to get the dividend. Now, dividends are not paid on the options themselves. Owning an option doesn't give you the right for the dividend. But what we do is the week before the ex-dividend date, we exercise the option that gives us the right to buy the stock. In this case, it would be $80. I get to buy the stock at $80, own it for a week, earn the dividend, and then convert it back to an option for 3 weeks or 3 months later. And I can do that over and over and over again. So I only have a portion of the capital at risk in the market for 12 weeks out of the 13 weeks of the quarter. And I only have the full capital in the market for a week. And so I teach that whole process, and there's a lot, I mean, there's a lot more to learn than just that, but it allows you to have just incredible returns on stocks that you want to own anyway, without having to have all the money invested in the stock for the entire time. And you could have most of your capital in cash.
And if you already own these stocks, then you've got a gold mine there, because you can do all this stuff on a monthly basis versus just collecting a dividend check, 2, 3, 4, 5% every quarter, and you're just making all kinds of money because you already own the stock. And if you don't, this is a way you can get into the dividend paying stocks, high quality stocks, without paying. Instead, this week we've been getting into Apple for like $1.50, things like that, and that's what $200-300 stock. Yeah, there's Deshaun, our star micro moment man there. Hey, Deshaun.
Hello.
How you doing?
Perfect. Sorry, it's a little late. We're still in the session, actually.
Oh, did you do more? Did y'all do any more after?
No, we didn't do any more trades. I was just a lot of new people were asking a lot of questions, so I was spending some time making sure I could help them on the journey.
Great. Okay. Well, y'all had a good day there. I was telling them y'all made 14%. You had a 7.7 SPY and a 4.8 SPY, and there was one Apple trade for 1.62. So you were the star high trader for the day. and yesterday, big time too, big time. So
Yeah.
so we have, and here's Lannon. Down here says Lannon. I have the manual, but is there any way I can get the electronic? Yes, you can. Just write to Sue Ann or just write to support micromomenttrading.com. Ask for the electronic version of the book and tell them you've got the old book, and she'll know that you've already paid for it, and she'll ship it off to you. So, who was that? The other one that came up there?
And Joe, I also did a micro moment trading this morning.
Nice.
And generated 4.0%. It took me 2 minutes and 21 seconds. So
there you go.
To get that. And I do SPX when I'm trading micro moment.
Sure. Fantastic. Randy just has some outstanding trades. Of course, I always claim he's old and slower, and we're doing our trades in 15, 16, 20 seconds, and he's taking maybe a minute and a half or something like that. But, it's okay. It works for him. And the lady that was just on there, where'd she go? Oh, there she is. Cindy. Can you be sure to discuss the PRT technique sometime later in the broadcast? Yeah, we can do it now. Why don't you go about the PRT there, Randy?
Well, I can give an overview, but
okay,
it's a half hour to teach that technique.
Do you have a specific seminar on that, don't you? PRT.
Yeah, I mean, okay. I go through it on Thursday evenings in the coaching webinar, but it's part of the 2-day cover call seminar. It's in the seminar manual.
Yeah.
And the PRT is called the put recovery technique. And getting kind of technical, because for those that don't know what the cover call process is that Joe teaches, one of the income generating processes, if the stock starts going down instead of up, we can generate income on that stock on a monthly basis while it's going down. And so we don't have to just watch it going down. We can generate income. And we do that by selling an option when the equity is at the top of its channel. And then we buy it back when it goes down, because one of the characteristics of options is they decrease in value when the equity goes down, if it's a call. And therefore you can sell the option high against stock you already own, and then you can buy it back when it decreases. And it decreases for two reasons. It decreases because the equity is going down, but it also decreases because time decay is happening to the option premium. So you kind of have two things working for you. There's nothing you can do about the stock going down, but you can use what's called the TSS technique, and Joe made that name up, so you don't need to be looking it up or call your broker. They won't know a thing what you're talking about. It's a technique that we teach to be able to generate income while the stock is cycling down. Now, we do that based on the chart. We watch the chart, sell the call when it's at the top, buy it back when it's at the bottom. If all of a sudden the stock decides it's going to turn around, it's been going down and up and down, and all of a sudden it turns around and starts going up, then we want to exit that position. And the PRT is a technique that can be used to exit that position with a profit, even if the stock went up instead of going down.
Yeah, that TSS stands for tethered slingshot. And the reason that it has that name is because we use that, and Randy uses that to throw a stock, a call, whatever, out into space, and then manipulate what's out there without any chance of it being called out. It's impossible for it to be called out. And that's why we call that, because anytime you finally get through doing what you do, and you may leave it out there forever, then you it's tethered, you just bring it back and get rid of it, do whatever you're going to do. That's why we call it that. So.
Yeah, so those are management processes that we teach in that 2-day seminar. And then I also review on the Thursday evening coaching webinars. So that's a weekly coaching session that supports and allows you to learn and master the techniques more quickly than just waiting for the 2-day seminar. And so those are excellent techniques when the market's going down, or when a stock decides that it's going down instead of up.
Yeah, Deshaun, why don't you read that one from Eric there, because the SPY trades are yours.
Yeah, well, Eric said he made 13% on two apples and one SPY trade on paper trading this morning on Thinkorswim. The fills were great. They always are. That's the thing on Thinkorswim paper trading. They are pretty great though. I would air caution on the paper trading on Thinkorswim though. I would more instead kind of write the specific numbers that you entered at, because Thinkorswim they feel you irrationally. They want to get you to real money as soon as possible or something. I don't know, but it does give you real good confidence. But then you'll go live trading and then you'll want to pull out the rest of your hair. So,
but virtual trading or the paper trading is the way that you learn how to and practice doing these processes before you start putting real money into it. So it's a great thing to do that you're practicing.
Yeah, I would say, yeah, definitely the paper trading, mechanics wise, you want to keep doing that mechanics wise till you no longer have to think about where your trade is that you're in, and you can exit like unconsciously type thing. So yeah, 100%.
I'm going to read this one from Marion and Micah. If your girlfriend's in the room, send her out. Marion says, "Hey, Micah, I miss you so much every morning." There you go.
Where's Micah?
I appreciate that.
What's up, big guy?
I'm running it for Marcus today, so.
You in the background, nice.
Yeah. Well, it is a little bit different being off the webinar and just doing my role now. Like, you get very used to that every morning, and it starts at 6:30 for me, so it was like how I started my day. So yeah, it's quite different, but I miss all you guys, and I'm glad everyone's still doing really well.
Yeah, Mike is out in Seattle, so he has some strange working hours.
Yeah, a little bit different. Picked the worst coast for trading, but
there you go.
I also wanted to take a little interim here and let everybody know we just added this to the website. And I wanted to let everyone know we still have our 2-week free trial until the end of the year, which is almost here. So that's going to go away soon. This is for Micro Moment. And then our upcoming events is a new feature on the website. So go through and look here for whatever you'd like. It's all speculative, of course, because social distancing, and some of them are online, some are not, but we have quite a bit of information here, so go ahead and take a look at that. Again, it's just right on our main home screen on this button. So I just wanted to throw
that's all the events that we do, the seminars. So yeah,
awesome.
And if you're interested in learning how to generate income with the dividend stocks on a weekly basis, you can send an email to support@micromomenttrading.com, and Sue-Ann can give you some information. We also will be teaching an actual workshop for a couple hours on the process early next year, and so you can also see on the website when that data is posted here shortly. The dates will be posted for our workshops next year, and we'll have a dividend dogs or dividend aristocrats. I don't remember what the name is, but we will have a workshop that will be online, live, where you can ask questions and be able to learn how to do the process that can generate really good returns on the stocks that you're planning on having, or you might already have, that you're doing dividends on. New for 2021 January. Does it say a date there? It was it January 30th?
We can't say it. It needs to be
January 30th. Okay. Yeah. So it'll be on January 30th.
January, May, and August.
Yep.
Okay, we're kind of beginning to run out of time. We only have about 5 minutes left. But anyway, wants to make a comment or ask some more questions before we run out of time. Yeah, I don't know if most people maybe have not seen Deshaun, because you only see him on this. He shaved his beard and totally, absolutely improved his trading. That's right. You can't trade and grow a beard at the same time. So.
You got to pick.
You got to make a choice in life, right? Cindy says, did you cover PRT? Yeah, Randy just did a while ago. The concept.
Yeah, and Cindy, if you send an email to support at micromomenttrading.com with any details of a position that you think you need to implement the PRT, I'll go through that step by step on the webinar tonight.
And she said that she had to step away, and that's why she didn't get it. And she says, okay, thanks. Good deal. Okay. Well, okay. Well, it's we only have so many minutes on this thing, and then they start screaming at me. Micah it's been nice. He hadn't started screaming at me, but Marcus always does. You see, we're out of time. And Randy, I appreciate you being here, and Deshaun and Micah for running it and talking also. And we appreciate the other folks being here. And we'll be here next Thursday, like every Thursday. And try to write in the Cow Report each weekend in the editorial report kind of what we're going to be talking about the next Thursday podcast. We into some problems. We had to delay this one a couple of times because Randy is a baseball player, and his league was down in Florida. He's in Atlanta, and had two big major games down there. He couldn't make the last Thursday, both on Thursdays. And so every now and then that kind of stuff happens. We just delay them until the next time.
And I'm back in training again, Joe, because our next tournament's in February. So I got to get back in shape for that.
Got to get there again, huh?
Yep.
Let me check some on the micro moment trading today. I believe they made 14% total, but for the week, Monday through Thursday, I think it's up to like 65 or 70%. So with tomorrow, session tomorrow will probably break 100 again. So that's good. But okay, thanks everybody. Appreciate everybody being here, and thank you, Micah, for running the show here. And we will see everybody down the road. Thanks a lot. Bye-bye.
Have a good day, everybody. Goodbye.